Good morning, all. We're just waiting for another minute or two for people to take their seats in the classroom, and then we will start. Thank you for your patience. Great. Okay, time to start. Good morning, all. Thank you for joining Cresco's second webinar of the year. I think hopefully many of you have attended previous webinars and you know sort of the rules of the engagement. So you don't have to take pictures of the slides. If you registered for the webinar, which you would have got the link for, you'll receive a recording of the webinar and the slides and a little 3 takeaways probably early next week there. If you have questions, please put them in the chat. We will go through each of the speakers. I will take some questions from the chat or ask a question if there aren't any. We'll let the speaker respond, and then we will promptly, hopefully, finish at 1 o'clock. If we're running out of time, unfortunately, Shirley is going to be the one taking the brunt of the end as the last speaker. Cool. So today we're talking about the realities of carbon tax. And really, I'm going to talk about the fact that we are undervaluing carbon tax in current project evaluations on the renewable side. Gillian Niven is going to talk about what's happening on carbon tax, or maybe what's not happening on carbon tax after the budget speech there and RECs. Anelisa is going to talk about the good work that the JSE is doing. And apparently we have some trades to talk about. It's still starting, but we're very excited. And then Shirley's going to finish off with the approach to carbon within the Eskom Megaflex tariff, which perhaps we think NERSA did one for a logical point of view in terms of it shouldn't be sitting there, and the other one maybe it's also a way of reducing the price increases. But I'll let Shirley unpack that later. So next slide, please. See, there's a question around sound. Is the Cresco team hearing? Is everyone not hearing my sound, my voice? Okay, cool. Okay. So I think we will go through these various definitions later, but carbon credit is not a REC and is not an environmental attribute. And I know Jill will touch on that a little bit here, but for the purpose of this discussion, I believe we're largely talking about RECs in whatever form, with whatever acronym in front is used, and potentially over time, the environmental attributes that could be attributable to this renewable energy. And we know as the market changes and rules are entrenched that these definitions will change. And I think most PPAs do cover either specifically a definition as in the second one here, or potentially one in the last one, which will allow us to, as the definitions change, to still cover the environmental attributes of the renewable energy. Next slide, please. So I think a lot of what the work we're doing at Cresco at the moment is very much focused on the impact of NYPD6, the very surprising 12.7% increase, which I don't think many people, at least on our side of the table, expected. As we mentioned, the carbon component of NYPD is not there. We've also done some long-term views around where we believe Eskom will get to in a 2035 view there. Eskom also applied for the Eskom retail tariff plan restructuring end of last year, and NERSA's had a busy 2025 because they did the NYPD, they did some other approvals, and they've also approved part of the Eskom retail tariff plan restructuring. Now, these two impacts may be one, a lower increase, which is good for the operational user, but now restructuring the tariffs, and even though only part of that was approved, we believe Eskom will come back and continue to ask for more. There's a stated objective that by the time the market comes, we'll have 30% fixed overheads. But this has very much resulted in that the value of renewables from a financial point of view has largely reduced. And from that is a concern for us because most clients, as much as scope 2 emissions targets are important, ultimately renewables are providing either stable increases in energy prices or at least some cost reduction against the Eskom largely cost plus model that's there. And so this is for us quite a material impact in terms of the value of renewables and the willingness of private sector to continue to purchase renewables across the various forms. We're also doing long-term demand supply analysis, load shedding scenarios. Sorry, just one slide back, please, Emily. We did to predict the February 1st load shedding event. We didn't predict the February 14th load shedding event. I think the level of unplanned maintenance was surprising. The other bit that we're looking at is, just like the NERSA 10 megawatt to 100 megawatt exemption was lifted, this introduction of what we call the market model or the day-ahead market or the Southern African Wholesale Energy Market, if you love a long acronym, SAWIM, for us really is also a real game changer in the liberalization of the South African energy market. And we're starting to look at how that influences loads, generators, and also the tariffing component. But at the moment, the market itself is carbon neutral or technology neutral. I don't think that's a shortcoming in that, but it does mean that other, like the JSE and others, need to talk about how do we value carbon from the energy market there. Then the other one is risk of balancing and value of dispatchable generation. So overs and unders, and then the timing of gas generation and pricing. Now that for us is a real concern because as the grid decarbonizes, and if you could go to the next slide, please, Willie, thank you. So this is the view of South Africa from 2024 onwards, megawatts on the left and megawatt hours on the right. And you can see we have a reduction in the Eskom coal fleet due to some decommissioning, but only post-2030, but largely also sort of the EAFs from the older power stations continuing to reduce, and this being taken up by renewables over time, both gas-fired power stations to balance the grid, but mostly renewable generation coming through. And you can see from that, this has resulted hopefully in grid emission factors reducing quite materially over time. However, we are aware that the concept of double counting is a real concern coming out there. The question was on the chat I see around when we think SAWIM is going to be here and link it to the slide. So by 2026, we believe one or two of the components of SAWIM will be in place, balance responsible parties, maybe not a balancing market. And then over the course of the next 2 years, we believe there'll be a market light, call it that, where we're proving the systems controls, some small energy being sold. But at least by 28, 29, we believe that the full market and what they call the transition phase will start. And as I've mentioned, at the moment, the energy market is technology agnostic. There's no planned green premium for renewables in the market code. I know some markets do account for that. I understand the Indian market has this concept, but at the moment the market is carbon neutral, and therefore I think that's why it's important that what the likes of the JSE are doing in terms of trying to structure and link how do we get the value of carbon back into the system. Next slide, please. So many of our clients are being put under pressure, obviously not to greenwash, but to have validity around a lot of what they are presenting to the market. And I know Google were taken to the cleaners a number of years ago, not just them. I think you could put various names here. But Google went out and did an energy audit of their data centers operations in the US, and you can see the ones close to the Great Lakes were very green. The ones in the southern part of the country were very grey, depending on the available generation. And they came up with this concept which has become more recognized of 24/7 carbon-free energy. So people don't want to just say 50% renewable penetration. They want to say when in the day are we receiving these renewable penetrations. And this is very much what we are now helping clients with, and looking at when you're getting energy from the grid, what would that grid emissions factor be? Or when you're getting energy from an on-site or a wheeling, what is the balanced grid emissions factor or total renewable on a 24/7 basis? Next slide, please. So in 2024, at a pure grid level, to be honest, we haven't really touched the surface. It doesn't do it justice, but most of the grey is still, areas are still low grey. This doesn't fully account for the value of the embedded rooftop solar. So I'm conscious this is only the large scale projects, but we really haven't touched the needle. Top left is a makeup of the grid in an average day in the year. So you can see it's mostly still coal. You have a little bit of PV in the middle, some imports, not really any bases yet, and then the diesel-fired OCGs this year really balancing the grid. This is done on an 8760 basis over the year, but for the purpose of the presentation, this is an equivalent. If you go to the next slide, please, Amelia. This is a view of the energy market in South Africa in 2030 based on the rollout. This is then done also at a client level, but let's use the national level. And you can see a lot of the sections have been greened, unfortunately, in the usual suspect areas. So the late morning to early afternoon from PV, a little bit in the early evening from wind, but still not really getting meaningful penetration in the early mornings. And that, I guess, is one of the technical constraints we have in South Africa, not having large-scale hydro or more nuclear. And we really stuck with the wind and solar, and then increasingly adding BESS to the system. On the left, you can see that the coal is a much smaller component of the grid, and therefore the grid emissions factor from there is reduced. Renewables is increased, but it is still uncertain in terms of where these renewables have been allocated. And I guess that's why at a national level, we're calculating a grid emissions factor. At a individual company level, we can calculate them, but there's a lot of, I don't want to use the word grey because it's grey coal, but there's a lot of uncertainty around, is this truly correct? So, for example, the Kuberg environmental attributes we understand are being sold in the market to help people with some of their renewable programs. But if someone buys them, then Eskom theoretically cannot use them in their grid emissions factor calculation because you can't double count. And then what happens to those electrons? The same in the system from a grid emission. Same as the Cabora Bassa coming in and then being sold to Mozal. So theoretically, Mozal is 100% renewable because it's theoretically taking hydro from northern Mozambique. Practically, it's not because the grid is not connected. But then that hydro imports that's coming in that you can see isn't part of our energy mix, and we plan to expect it to increase, that also then cannot be double counted. And I guess that's a real concern around grid emissions factors and allocations at the moment. We don't have real clear rules, and there seems to be people grabbing the same electron, not just from not from a reconciliation financial point of view, but from an environmental attribute point of view. And I guess that's a real concern and creates uncertainty in the market going forward. Next slide, please. So this is the grid emissions factor, as I said. So at a national level, and then we've worked it out at a regional transmission level based on our analysis. And I think this is also where we need more rules and clarifications. And I know there were some rules recently legislated or promulgated there. I'm not sure that we've fully taken them into account. But if you look here, you have the national grid emissions factor that goes down over time based on the decarbonization of the grid. This doesn't include the double counting impact. But you have Limpopo and Mpumalanga, where most of the coal sits, that unfortunately actually has a higher grid emissions factor. So if you actually went at a regional level, you'd be disadvantaged. Whereas if you live in the Western Cape, and theoretically your electrons are coming from Kuberg and maybe some pump storage and that, then you actually have a very low grid emissions factor. So as we said, we have lots of the data and it's there, but at the moment this data can be represented or misrepresented depending on how certain people are using the data in a different way. But that's all part of the work we're doing this year. And as we get better data, we have more clarity on the rules of engagement. I think the outputs and the reporting will improve, and therefore hopefully also the transparency on what people are commenting on in the market. Cool. I think that's all of my slides. I just want to check if there were any specific questions to cover. The slides will be sent, and then I think I did also answer the question around when the day-ahead market's coming. I will take a quick question if there's anyone else in the chat. Otherwise, I'll hand you over to Gillian Niven. I'll take one question quickly, Jill, and then you can jump in. So interconnected regional grid. So I think when you're saying regional grid, Kathy, I assume that you're talking about the link with SAP. And I guess over time that will happen. I guess we just need to make sure that all the countries in SAP account for grid emissions in the right way. So, I mean, we know Zambia is substantially more decarbonized because of hydro heavy. Botswana is even worse than South Africa because they only have coal, and Zimbabwe is changing as they have some hydro and they have some coal. But I do believe that over time, a regional, as soon as we start importing hydro into South Africa, and we do see over time perhaps that large users will access hydro north of the South African border because it's not available here, that we will have to start reporting regional grid emission factors. So I think we're all aligned. Jill, good luck. Thank you.
Cool, thanks, Rob. For those that don't know me, I'm Gillian Niven. I'm an environmental, ESG, and carbon markets lawyer. And Rob has tasked me today with, I think, 6 to 8 minutes of speaking about the carbon markets, which is no small feat. So I think just for everyone's purposes, we'll touch on concepts here, and happy kind of to delve more if required later on, and obviously in the chat. So I think it's important to note South Africa's been on an environmental fiscal reform journey for well over a decade, and that the journey has included considerations on market-based instruments to address climate change. One of the significant focuses was on developing policy and legal frameworks for carbon pricing, and essentially that is what this slide is depicting. And it included publication of various discussion papers, policy papers, and ultimately the enactment of what we know as the South African Carbon Tax Act. So the original South African carbon tax discussion paper, which was entitled Reducing Greenhouse Gas Emissions, the carbon tax option, that was published in December 2010. And it followed an announcement in 2008 on electricity generation levy, and essentially explored potential of carbon tax to reflect the external costs of greenhouse gas emissions within the country. The discussion paper, after much robust engagement with stakeholders, was then followed by a carbon tax policy paper in 2013, which ultimately took account of comments received, and then from various stakeholders, and elaborated on certain of the proposals, the carbon tax proposals. And ultimately, the Carbon Tax Act was gazetted in May 2019 and came into effect on the 1st of June the same year. So the implementation has been in a phased approach with an initial low carbon tax rate, and various allowances, primarily to allow industry a transitional period, and to ease them into kind of this new tax burden. Next slide. So this slide's just kind of giving a very high level overview of how the carbon tax is structured. There is a tax base, which includes greenhouse gas emissions from fuel, combustion, industrial processes, and fugitive emissions, and it targets scope 1 emissions in our first phase of the carbon tax. What it also does is it offers a number of tax allowances to the taxpayer, which range between 60 and 95%. And we've listed a few of those to just illustrate the nature of the allowances, and how much can be given as a reduction on that tax liability. So those allowances are used by the taxpayer, and that influences what is the effective tax rate payable. The current, just for interest purposes, the current carbon tax rate is 236 Rand per tonne of CO2 equivalent. Next slide, please. So where are we going? Ongoing developments to the carbon tax and our carbon markets include adjustments to the carbon tax rate. It includes adjustments to the tax-free allowances and the expansion of the carbon offset mechanisms. There is a growing focus on developing the domestic carbon market, and that includes trading of carbon credits and the potential for allowances in the future. South Africa's carbon market is expected to continue evolving. We have seen kind of some momentum in the last 3 to 4 years, and then obviously with the enactment of the Carbon Tax Act, and then a little bit of a slowdown from international kind of geopolitical influences. But we do anticipate kind of a development of that market, and that includes various drivers like need to meet international climate change commitments and international trends like the imposition of CBAM, which is a carbon border adjustment mechanism. So we do expect continued evolvement of this market within the next few years. Next slide, please. So in terms of phase 2 of the South African Carbon Tax Act, which is expected from the 1st of January 2026, what are the opportunities that we see? Primarily, we're looking at the carbon offsetting, which is obviously one of the notable carbon tax optimizations that has been presented. And this allows companies to reduce their liability by investing in eligible projects. The proposed increases in carbon offset allowances will allow companies to use more carbon credits to offset their emissions, and that ultimately drives the demand for carbon credits generated from those domestic projects. It's also likely to lead to the development of domestic standards, which we will hopefully broaden this concept of additionality for the South African context. And although this is a discussion in its own right, I think it's important to note that there are a number of local stakeholders that are really trying to push the agenda forward quite proactively. There are limitations from an energy sector perspective on what projects are eligible or currently eligible under the Carbon Tax Act. And really the development of this domestic standard, the hope is to broaden what kind of renewable energy projects can then become eligible for carbon offsets, which is obviously an important motivator and driver in the market, in developing the market. Allowance trading is also anticipated in the future with carbon budgets coming into effect. And that will allow companies essentially with excess allowances to sell them. So the increased activity is also likely to necessitate development of dedicated trading platforms for the buying and the selling of the carbon credits. And I'll leave that topic for the next speaker to speak more broadly on. Next slide.
So Jill, before you go to the next slide, sorry, if you jump back, because now we talk about who owns them. Let's talk about the process. Sorry. Go back again, please.
Other way.
Other way. Thank you. So, I mean, huge amount of, in my view, uncertainty, right? And what the left hand saying is not what the right hand saying. And like a good newspaper article, what the header of the legislation says is not what is in the detail, right? And and I'd be interested your view around why the messaging is inconsistent. So that's the one question. And then the second one is, and there are two specific questions I'll get to at the end of this first question. And the other one is, what's the most efficient way to collect carbon tax, right, in my view? Because through the electricity bill was a very blunt instrument. And then it is not really eventually through, as it's deemed to be, through the income tax process that needs to be upgraded, because then you can make it more specific. Because at the moment, I don't see that I've seen, and correct me if I'm wrong, there's not actually around how does the process work. You're like wheeling, we talk about reconciliation of energy, and there's an actual calculation that there doesn't seem to be that detail in the current carbon tax thinking. So those are my two questions. Thank you.
So, I mean, going to your second one, Rob, SARS is collecting on carbon tax at the moment. We were in a presentation for the last 2 days with a carbon markets think tank that a number of us participate in. Treasury is present there. And as I understand, they are currently collecting within the region of 2 billion rand per year in carbon tax. It's obviously not earmarked or ring-fenced. The view there is, I think it's not sufficient to necessarily. Firstly, Treasury doesn't take that approach. It's not a preferred approach of Treasury. They don't think that it's necessarily efficient to address climate-related mitigation and adaptation, and you would want to be able to utilize other revenues from Treasury for these purposes. So if we just look at our commitments, our just transition commitments, those exceed the 2 billion that they're collecting from carbon tax. But the tax rate is going to go up. There's going to be significant, and I'm not sure on the process. It is quite a clear kind of process, and it falls within the tax regime. There may not be necessarily as much transparency in terms of exactly how much is collected, and we get these numbers thrown around. But as I said, that was the number that was set to us, and Anelisa can tell me if I'm wrong, but that's kind of something I noted down when we were in the presentations over the last 2 days. Sorry, Rob, your first question?
Is the fact that the headline and the detail are very different, right? And it's a bit like on the one, in the Eskom world, on the one hand, we have people trying to have a liberalized market, and the other side, Eskom distributions blocking trading licenses. Like, it's just inconsistent messaging, right?
Well, I mean, that's standard for government in South Africa. But I think, I mean, Treasury is quite clear on what its policy reform is and development and evolution of the carbon tax. They've put out discussion papers. They put out the discussion paper for phase 2 at the end of last year. They have had a roadshow of presentations. So I think they're very clear. What they are doing is there is a lot of comment and opposition to when certain of these allowances may be reduced, when the carbon tax rate might go up. And I think that they are taking into account. So I know some of the proposals that Treasury had put in to the phase 2, they are re-looking at the timing from that. So like they're looking at retaining the basic tax-free allowance until the 31st of December 2030. And that really is given as a result of concerns about availability of low carbon technologies, energy costs, competition, load shedding, logistical challenges, etc. So I do think that there are these statements made, ambitious statements made about when and where we're going, and the timing then gets pulled out. The extent of the allowances or the implementation of the actual mechanisms changes slightly. But the policy is quite clear, and for anyone that wants it, the phase 2 discussion document is out for carbon tax specifically.
Cool. And that little pun part of the question. So we're doing a number of carbon workshops for clients. It's not that, you know, I think your 4 slides here only touches not even the contents page of what's there. But how would you suggest people take this on? Because there's a lot of stuff coming from lots of directions.
Yeah, at the moment, I mean, Rob, I know Cresco is looking, when we've worked in decarbonization strategies, I think this is fundamentally important to consider carbon market opportunities and implications of what the carbon tax may mean, how to leverage off those opportunities, where the market is developing, what do carbon offsets allow, if you are utilizing RECs, how does that implement or affect the strategy? And I think those are quite important considerations to build into existing decarbonization strategies. The carbon tax doesn't just speak about scope 2, which is obviously the energy and electricity component of it. It speaks about scope 1 as well. So when you're looking at your carbon offsets, you're looking at your scope 1, 2, and 3. When you're looking at your RECs, you're looking at your scope 2. And I think it is building out a really strategic strategy around how to utilize the market, noting that we are looking at muddied waters. So I don't think that gives an answer to anyone, but really it becomes a case-by-case basis on the actual business, the entity, the business, and where you're operating.
Cool. There is one question in the chat. I don't know if you want to quickly open it from Zivi Kutsia and just answer those 3 questions quickly. I think
so
they are yes.
Scope 2, that's our phase 2 of the carbon tax, and that's the timeline that has been pushed out. It was meant to come into effect this year. It's being pushed out to next year. So at the moment, next year, January 2026, but we are waiting to see. Eskom is included in the current carbon tax, just so everyone knows. Electricity is not excluded. There is no exemption provision in the carbon tax. What Eskom does have is a different calculation of how to work out its carbon tax liability and what it is allowed to do. is reduce its tax liability by the procurement of renewable energy. So all of the REIPPP projects that it is procured, it can reduce its tax liability by those projects, and there is a specific calculation for it. And this kind of touches on what Rob was speaking about in terms of the double counting scenario, unforeseen potentially double counting scenario that we are encountering now in the market. So we'll get to that slightly later in one or two of the slides. But
cool.
yes.
I'll let you continue. Sorry for
Thank
delaying your slide.
Okay. I always like to go off on a tangent, Rob. Next slide. Okay, so I think this is a great segue into kind of who owns these attributes. And when we talk about carbon offsets, I think we must understand that that is a different instrument to what the market, particularly the energy market, is really becoming accustomed to in terms of concepts like renewable energy certificates and environmental attributes. And so the renewable energy certificates are essentially a verification or a validation of the source of the energy, that it is a renewable project, and it's per megawatt hour. A carbon offset looks at an emission reduction that the project gives. The thing that is important to note is, although they are two different instruments and they are seeking to account for two different environmental attributes, they cannot both be claimed for the same project. So if you claim a REC, you cannot claim a carbon offset. There aren't any rules, however, that regulate that that market. So essentially what we have seen now is, with the increase in the support of net zero targets and decarbonization strategies, we've seen this increased consideration by the private sector in particular of how to leverage the carbon opportunities in energy projects. And in the preceding 3 to 4 years, we started seeing this inclusion of environmental attributes in project documents. And that clearly kind of regulates what the situation is. But South Africa does not have any specific regulations on the generation and ownership of these environmental attributes. And the standards that the registries, the standards that you go through in order to get these attributes issued, they similarly do not specify which entity, so the buyer or the seller, who actually owns those. They have a process of how to register, how to verify, how to issue, how to retire, but they don't specify who the owners are. So that comes down to contractual considerations and all legislative provisions. And as I said, South Africa doesn't have any legislative provisions. So ownership then has to be determined by undertaking an analysis of the contractual arrangements. And if that's silent, if the contractual arrangements are silent, then you have to go to first principle law, kind of law of first principles, and you're looking at things like the rules of property law and common law claims of ownership. And that becomes quite a complex and convoluted legal interpretational debate, which we definitely do not have time for today. But what I did want to highlight that this interpretational challenge is something that we are seeing in the REIPPP context, where the PPA, which is concluded between the seller and the buyer, that document is silent on the issue of ownership of RECs. Although it does seemingly have a clause that allows for a renegotiation for emission credits. And what is also challenging there is emission credits are not defined in the project documents. And again, as I said, emission credits are slightly different instrument beast to what we understand as RECs. So this omission of specific provisions within the REIPPP project documents, and noting that this market, it's likely that there was a holding clause there to see how the market develops, not knowing how these instruments would play out. But the omission of those specific provisions is concerning because what it does do is it leads to kind of an opportunity for various arguments to be made of who owns the RECs. And then that RECs were not intended to be components of the energy sale. And that would be an argument, for instance, for the REIPPP. So it could be interpreted that the IPPs maintain the ownership of the RECs as the generators of the energy. Conversely, Eskom could argue that the environmental attributes, and I put environmental attributes as our broader bucket. RECs is obviously one. Environmental attributes could be the offset and the RECs. But Eskom could argue that they have that full suite of environmental attributes as they intrinsically connected to the energy that they have procured. So again, what this does lead to is kind of an interpretational arguments. It's remaining really dynamic. We are engaged, Niven Attorneys is engaged in pursuing some of these arguments for the private sector. What I would say is it warrants close observation. There are risks associated with the REIPPP RECs, and happy to discuss those more. If we move to the next slide. What I wanted though to say is obviously that is a very specific context that's to the REIPPP projects. In the private sector projects and embedded projects, what that illustrates is how important it is to contract sufficiently for these environmental attributes. And so what the slide, the purpose of this slide is to depict some of those contracting themes. So ownership and title, which is something that we're seeing in the existing PPAs. We're seeing that the PPAs say who has ownership of them, when is it transferred, and potentially a tariff. And if there is an allowance for that or a mechanism for that tariff to be adjusted based on market developments. But things that we're not seeing is if there's an excess in RECs, who has ownership of those? Is there a right of first refusal? What standard? So the PPAs usually do select a standard, but could you have multiple standards? How do you switch standards? Transfer and a delivery is something you need to look at. You need to ensure compliance with the selected accounting and registry standards. And there are various obligations to both parties that need to be expressed quite clearly in case there is a default. Something that we don't see is vintage of RECs and attributes. So this is delivery of RECs within a specific period, and that needs to, some off-takers need that to align with their accounting periods. And then what is the recourse if RECs are not delivered within that period? Also restrictions. Why are RECs being required? Where are the operations located? Are there any geographical restrictions? And then failure to deliver, consequences under the PPA. Are they replacement RECs? Are they damages? And what is the greenwashing exposure to the extent that the REC being sold has been double counted and is invalid? So I think leaving a lot there to kind of think about, but it just demonstrates the importance and the development of this topic specifically.
Cool. I've given you enough questions and there weren't many more, so
cool.
We're going to kick you off. Thank you, Gillian. Nicely done. Anelisa, over to you.
Hi, thanks, Rob.
My on your camera, please.
It is on. Sorry, I'm coming through another name, Yvonne Mushidi.
Oh, okay, cool.
My computer actually crashed and I had to quickly use another person's computer, but nevertheless.
Good flexibility. Well done.
Perfect. My name is Anelisa. I'm from the JSE and I head up the commodity derivatives division at the JSE, and I also look after our carbon market initiative, which is a rather new initiative, which we launched a carbon market in partnership with a company called Expansive just over a year ago. So you can move to the next slide. Wumile, thank you. So really, I suppose I'm going to do the easy part, which is talking about trading platforms for carbon credits and renewable energy certificates as well. From a JSE side, really our core is to facilitate cash flows from investors to where capital is needed. So to projects or capital projects, or whatever the asset class is, it doesn't matter. That is really our core at the JSE. And with respect to sustainable markets or carbon markets, we have an ambition to develop sustainable markets to help with the transition to low carbon economy. And really how we facilitate that is through responsible investing. And we've got various products within the JSE that assist us or assist the clients with this. So it's sustainability indices, which have been around for quite some time. We also have sustainability instruments, specifically bonds. So green bonds, social bonds, where entities or companies raise capital or raise debt to invest in sustainability projects. We also have JPP, so that is the JSE Private Placement. It's a subsidiary of the JSE, 100% owned by the JSE. And really, it's a platform that links up investors and people that need the money. So in the case of carbon project developers, etc., but various project types can actually be listed on JPP to really raise funding, but on a private placement perspective, not necessarily the listed securities. And then the new kid on the block, I suppose, is the voluntary carbon market, which we launched just over a year ago. So you can move to the next slide. And as I've alluded to the fact that we partnered with a company called Expansive. They are an American company who have been operating environmental markets for some time now. Some of you who are involved in the market have been trading these carbon credits globally might know them as CBL, but CBL was acquired by Expansive. CBL has been operating since 2009, and that's why we really loved to partner with them, because they've got a track record, number one. They've built quite a huge client database over the years. And really the way this arrangement works is that JSE Ventures, maybe I must also highlight before I move on that carbon markets are not really regulated in South Africa. And remember, from a JSE side, JSE Limited side, we've got a license to list and enable or facilitate trading of securities, right? And now carbon credits and renewable energy certificates are not really defined as securities at the moment, and therefore we operationalize the carbon market through a subsidiary called JSE Ventures, which is fully owned by the JSE. So the architecture of the platform is that our clients who we've signed onto the system have access to this notion of a global order book. So a client in South Africa, a project developer in South Africa can really put their credits on offer. And it could be an American counterpart, Australian counterpart, anyone in the globe that is subscribed to the system that will be able to buy the carbon credit or the renewable energy certificate. So really a global order book. And really that was what we were trying to achieve, and not to ring fence to ring fence this for the South African market only, but really the ambition is to send this to the rest of the continent. So to enable the rest of the continent to be able to negotiate price in a clear, transparent manner with multiple options in terms of counterparts, and therefore really, negotiate better prices. But that's of course from project developer perspective or seller perspective. Nevertheless, the system is linked via API to various connected registries which house carbon credits as well as renewable energy certificates. You'll see the big global ones there, your Veras, your Gold Standards, your Puro Earths, and Evident as well. And Evident is really the registry for renewable energy certificate, but they're called International Renewable Energy Certificates, and they pretty much trade globally. And Expansive also has a number of brokers that literally go out there across the globe to look for buyers and sellers of carbon credits, etc. But they also have relationships with CME, one of the biggest derivatives exchange in the world, CME, which actually have a carbon credit futures contract but the physical delivery or the transfer of the actual carbon credits happens or is facilitated on CBL as a spot market. And they also have relationships with S&P, distributing of data that's pretty much traded on expansive. You can go to the next slide, Vumile. And really, I don't have an indication of, the audience today, so I don't know the level of understanding of the carbon markets, but I'll just quickly go through the process as to how the carbon market structure really works, or how carbon credits come to being. And this is a slide I usually use, with listed companies when I speak to listed companies, really trying to onboard them in this value chain or in this market, just to say simplistically, it's project developers that list or register their projects with standard. It could be a global standard. It could be a local standard. It doesn't matter. Or this could be IREX as well. And then you have VVBs in the standard. Or you contract VVBs through the standard to validate and verify your project. When the standard is satisfied themselves, they issue with a carbon credit. And for a lack of better word, let's just call it an asset, because it could be a carbon credit, could be a renewable energy certificate as well. So once you have the asset, you can transfer it to the trading platform. First of all, you need to be onboarded as a client in the trading platform. You load your credits in the trading platform. And from a buyer, it's a pre-funded model, which means the buyer will need to have cash in the bank account before they can bid, or before they can say, I want to buy that credit. And on the sell side, the seller needs to have the credits issued and in place by the standard. And once you have the credit, you offer it for sale, and then the buyer then matches you. And what we do is we transfer through the platform the certificate, the credit from the seller to the buyer, and the cash from the buyer from the buyer to the seller. All one day, T's plus zero settlement. And then, of course, the buyer would typically be the emitter, which then uses the carbon credit or renewable energies, the carbon credit for offsets in the carbon tax in the case of South Africa, or for net zero purposes. So high level, I really like explaining, because I never know, if the audience understand exactly how that works. You can move to the next slide. Okay, I'll go quickly through this in the interest of time. I also like explaining, especially to the listed companies, that there's various uses of these carbon credits and renewable energy certificates, and really it all adds up to the emissions inventory and net emissions inventory reporting, which they have to do to SARB, or the regulator, which then informs their carbon tax, which they're obliged to pay. So of course, scope 2 renewable energy certificates speaks to scope 2. And then carbon offsets speaks to the offsetting of the emissions inventory, the total emissions inventory, then, which includes scope 1, scope 2, and scope 3 of emissions. So you can move on to the next one. And here I thought I'd spend some time on this evident registry that issues international renewable energy certificates. So you'll see here, this is just the map of the devices that are connected or that are registered via Evident. And you'll see already in South Africa, we've got quite a number of devices that are registered and are generating renewable IREX and selling those IREX in various platforms. Some are sold through expansive and some through bilateral agreements. But it's interesting that already South Africa is there. Perhaps some of you in the audience already have integrated to Evident. But I guess what I was trying to highlight here is that it's an international standard. Yes, it will be a little much more pricier than the local standard. However, I think the crux of it and what's important is the fact that you can sell it across the globe. It will be relevant for a client sitting in Europe, in the US, or whatever the case might be. And what we're also hoping is going to happen is that the CBAM recognizes IREX as an offset when it comes to importing into Europe. We're really hoping, and I know there's various groups that are advocating for that to happen, and that would really open up the market. You can move on to the next slide. Oh, this is just a picture that shows exactly where the projects which are registered with Evident are in South Africa, and we know all these projects, but it's very interesting that this is public knowledge. It's available on the registrar itself. Can you move to the next slide? 51. Oh. And here, I mean, we're very excited that we managed to get our first carbon credit transaction, specifically tax eligible. So transactions are going through the system on a daily basis. Different project developers across the world buying and selling, including South African credits, but pretty much credits that are not eligible for tax transact on the platform. But this was really our first transaction that is tax eligible, a COHES certificate. But nevertheless, you can see the project. It's a renewable energy project, a South African renewable energy project. And I can't tell you who was the seller of the project, whether it was a developer or a broker. But the buyer, what I would like to highlight is that the buyer was an international broker. And obviously, the assumption is that the underlying client or the end user of the carbon credit is probably a business that has South African interests who could or could not use the carbon credit for tax offsets or just net zero commitments. The deal went through at $8.25. Initially, the offer was at $9, but I think the seller panicked. I'm not sure why, because we had so much interest on the carbon tax eligible credits. In fact, after this deal transacted, people were asking us for about 80,000 and so on, which of course we know very well in the South African context, it's very difficult to source that supply because it's very limited. But this was our first transaction in the carbon tax eligible credits, and it happened in January. And we're really hoping that we're going to start to see more of these. Some of our registered project developers have indicated that they're getting issuance in the next few months. So definitely you'll see more of those transactions. Can you move on to the next one? Oh, okay. So really, this is just a picture of what the platform looks like when you log in. And I suppose my call to you or whoever is involved in the carbon markets and IREX as well to reach out to us should you be interested. We're really in a phase of onboarding more clients, trying to get more volume, also trying to get clients throughout the African continent by partnering and collaborating with other African exchanges and other African vendors as well. So it should be interesting. Really, the objective and the ambition is to just make sure that we build a carbon market, not only for South Africa, but for the rest of the region.
Cool. Thank you very much. Do a couple of quick slides. I think Shirley's going to get caught with the 2 minutes at the end, but probably happy with that. She's done a few of these. But so there's a question around, and I see Volker and Jason are from ZRX, and you went with Evident and that process. How did you go through selecting them, I guess, is the question.
No. So Evident was not selected by us. They are part of, I suppose, the expansive ecosystem. ZRX, we've spoken to ZRX, and we want to include them in the platform as well. But I'll take this offline with Jason. But it's something that we want in the platform.
Okay, cool. So it's not exclusive. You can kind of do whatever.
Absolutely not.
And then I think you know from the beginning that renewables is losing its value, and hence the reason we're having this discussion. We've recently engaged with Evident on verification. And as you said, like the actual upfront fees aren't unreasonable, to be honest, and I know they're separately available.
Expensive, yeah.
But but when you start looking at the megawatt hour fees for registration and redemption, and if you times down 1 megawatt because it's a little bit of effort to set up once, but if you times by 500 megawatts, the amount of effort for the same thing. So your thoughts around fees and scaling of fees, because if you add that in the mix, suddenly you have more erosion of the savings that probably isn't needed. Do you have a thoughts on that? And I'm not focusing on the JSE fees. I'm focusing on that part of the process.
Don't worry. So, okay. So, I mean, the reality is that this is an international standard. In fact, we're having the same conversations around international standards in the carbon credits. The fees are just expensive and all the fees add up, right? Hence, I'm saying there's interest for us from a South African exchange to start including local standards as well. We absolutely have no influence on the registry fees, and do you know what I mean? Because it is a global and international market. We absolutely don't have control of the fees. Those who are interested in registering, they are aware of the fees. Perhaps they think there's value in registering with an international standard versus a local standard. But the solution from our perspective is the inclusivity and then just including local standards as well.
Brilliant, cool.
Sorry, I also saw another question earlier. It was just around trading in USD on the JSE, particularly this market. Like I said, it's called JSE Ventures, and the trading is in USD because it's a global order book. So the trading and the settlement is in USD. However, we do facilitate settlement in ZAR as well. Of course, there is a fee because it's through Bank of America. But one of our objectives for this year is to really try and involve a local bank to try and help with the settlements, because we've spoken to a lot of clients who say, you know, I'm a South African client. I'm only interested in buying tax eligible or COES eligible credits. So I will probably buy from a South African project developer. I don't need to be, you know, changing my rands to dollars and then back, and then the seller changes the dollars back to rands. It just doesn't make sense. Just add a layer of costs. So what we're trying to do really there is to simplify that process and include an option of settling in rands through a collaboration with one of the banks. So hopefully by the end of the year, we'll be able to launch that.
Thank you very much. I'm going to kick you off now and let Shirley take us home. Thank you very much. There are a few other questions in the group, but we will endeavor to try and answer them as much as possible on our feedback when you get it next week. So Shirley, I know you only have 2 slides, so 3 minutes. Good luck.
Thank you and good afternoon, everyone. So this is really just touching on carbon tax and the impact of that on electricity tariffs. So Eskom currently pays a form of a carbon tax in terms of the environmental levy, and this is just a pass-through in the tariffs. And to be noted that when the MYPD, when Eskom did its MYPD application, it actually applied for like 45 billion rands worth of carbon tax over the 3 years. And this was removed in the NERSA decision. So the question, of course, is why was it removed? NERSA didn't actually specify, other than that they had a discussion with Treasury. And in the communications that have been sent out, there's been no explanation of this. We can only assume that it's because there's a delay in what is going to be implemented. The important thing, though, just to mention on this is a pass-through cost. So whatever gets raised to Eskom as a tax just gets passed on to the customers. And that provides no incentives as such to actually reduce your carbon burden, because it's just a pass-through. So, and also when the wholesale market comes into play, this is a cost that gets added, we're assuming, to the system marginal price, which means it's going to be a cost that gets added to what gets paid out in the market. So I think there's some work that's going to need to be done around how carbon tax is actually being treated in the electricity tariffs of customers. Next slide. So there was some work done by Cresco on evaluating what these future tariff changes would be, and also looking at MYPD, and some scenarios were built around the MYPD decision and the MYPD application by Eskom, and 4 scenarios were looked at. One was a high road, which was an optimistic, looking at the lowest tariff increase, and then a medium road, and which is sort of a balanced view, and then a rebased one, which is really Cresco's view of what's going to happen going into the future, in particular after the MYPD 6 period. And then this low road is, is Eskom going to claw back all of what was not allowed in future years. So, Rob, I don't know if there's anything else you would want to be said on this, other than Cresco's done this work.
Yeah. No, I mean, I think it just wanted to show that there is a carbon tax component within the Megaflex tariff, and you can include it or not. But thank you very much to everyone. We've run out of time. Thanks, Shirley, for taking us home quickly. As mentioned, there will be a recording sent through next week to those who registered. If you are registered, you'll get the next one. We're actually hoping to do one with Energy Council and SAWIM in a couple of weeks. So appreciate your time, and I hope you still get value from this hour. Have a good weekend. Holiday tomorrow. Thanks very much. Cheers. Bye-bye.